Bitcoin price limps under $20,000 as Asia extends global stocks weakness. Bear market will last until crypto apps are actually useful. Mark Cuban. Uganda's gold discovery. What it could mean for crypto. MicroStrategy scoops up 480 Bitcoin amid market slump. Bitcoin price limps under $20,000 as Asia extends global stocks weakness. No let-up in risk assets means Bitcoin faces more selling pressure, but hope remains that a key moving average could soon see a challenge. Bitcoin, BTC, returned under $20,000 on June 29 as analysts stayed hopeful of a trip higher. Traders looks to $19,500 for support. Data from Cointelegraph Markets Pro and TradingView followed BTC, USD as it crossed below the $20,000 mark for the first time in nearly a week in Asian trading hours. The weakness followed range-bound behavior near $21,000, this characterizing a market still in tune with moves in global equities. The S&P 500 had finished its previous session down 2%, while the Nasdaq Composite Index lost 3%. On the day, Hong Kong's Hang Seng was likewise 2.1% lower, while China's Shanghai Composite Index traded down 1.4%. With few bullish cues coming from macro, Bitcoin thus had little stopping it from revisiting the lower end of a range in place for several weeks. Bitcoin is giving that correction, was anticipating a potential low at $20,300, Cointelegraph contributor Michael van de Poppe wrote in part of his latest Bitcoin-focused Twitter update. We get $20,100 as that's the second important one. Would like to see it hold here and see additional confirmation on LTF. If it doesn't, $19.3 to $19.5K next for support. Zooming out, other sources were still optimistic about the potential for an assault on resistance further up. For on-chain analytics resource material indicators, this could still come in the form of challenging the 200-week moving average, a key bear market support level, which had begun to function as resistance in June. Stocks continue downhill. Focusing on macro, commentators argued that with little certainty about economic strength available, risk assets such as crypto would continue to suffer on longer timeframes. The mood followed a prediction from big short investor Michael J. Burry that the U.S. Federal Reserve would abandon its inflation-busting quantitative tightening (QT) policy in 2022 and return to more accommodative conditions. Deflationary pulses from this to disinflation in CPI later this year. Greater than Fed reverses itself on rates and QT to cycles, part of a tweet published June 27 reads. Only a clear boon for risk assets would therefore cut Bitcoin and altcoins some slack, popular Twitter account TXMC Trades responded, this perspective echoing views of various commentators including former BitMEX CEO, Arthur Hayes. Bear market will last until crypto apps are actually useful, Mark Cuban. The billionaire investor said a bigger focus on applications and utility outside of finance would bring more back to the crypto space and possibly reverse the declining market. Mark Cuban, the billionaire entrepreneur known for his role as one of the main investors on the reality television show Shark Tank, said the crypto bear market won't be over until there's a better focus on applications with utility. He also doesn't think the market has hit cheap prices yet. Cuban has stated in the past around 80% of his non-Shark Tank portfolio was in crypto. Appearing on a June 23 episode of the Bankless podcast, he was asked how long he believes the current crypto bear market will last. It lasts until there's a catalyst, and that catalyst is going to be an application, or we get so low people go, fuck it, I'll buy some. He believes a better focus on applications with utility will pull crypto from its slump, and with so many apps focused on financial technology or collectibles, the launch of a business-focused application would be one of such events that could spark a reversal for markets. Using the example of a decentralized version of QuickBooks, a small business accounting management software, Cuban predicted a rush of users if something like that launched. Despite analysts predicting that Bitcoin, BTC, as well as many other cryptocurrencies have hit a price bottom, Cuban says, it's not cheap yet. When analyzing the high market capitalization of some projects, you look at the market caps, and you see it's $1 billion plus market cap or $6 billion or $8 billion or $40 billion. You don't look at that and go, that's cheap. If you remember back to DeFi Summer, these things were selling for less than a penny and their market caps were in the hundreds of millions. He adds even with lower market cap cryptos, there's no utility, and gives an example of the decentralized exchange, DEX. Sushi Swap. Sushi token is a relatively cheap buy with its $215 million market cap, but added, You get paid it if you're a liquidity provider, but then who's going to buy it from you? What's the reason to buy it from you? Cuban believes mergers between different protocols and blockchains will eventually see the crypto industry consolidate, as that's what happens in every industry. I'd rather get with somebody who says, let's do a roll-up, with Cuban saying that he'd support a merge of various blockchains, close others and then move applications and communities over to just one and offer a token exchange or bridge from the closing blockchains to port users over. Now all of a sudden your user base is 10x. You still have a problem of better applications, you still have to have some reason people want to use that blockchain. But at least you may be able to have a better community to come up with ideas because otherwise you're gone. With the crypto space having various subsectors such as Layer 1s, Layer 2s, non-fungible tokens, NFTs, and decentralized finance, DeFi, tokens, Cuban was asked which he was most optimistic on. Cuban said he was particularly interested in carbon offset DeFi tokens, which he burns to offset his own personal carbon footprint. He added that while not everyone cares about offsetting their carbon emissions, it was the easiest way, in comparison to buying carbon offsets from a broker, which he claims is a pain in the ass. Ultimately though, Cuban said, all of them have potential, that's why they got all this money, all of them have a reason why they think they're better and will succeed. Uganda's gold discovery. What it could mean for crypto. Is gold becoming inflationary? Can Bitcoin replace it as a store of value due to its scarcity and reliability? Are Uganda's numbers implausible? Questions arise. These are fraught times for the cryptocurrency and blockchain sector, so it isn't surprising that industry proponents might seize upon any promising news to help charge flagging markets. A Reuters report out of Uganda last week about a massive gold ore discoveries supplied just this kind of fuel. What does the state of gold mining in Africa have to do with the price of global Bitcoin, BTC? Quite a bit, potentially. Bitcoin has periodically laid claim to being digital gold largely on the strength of its strict 21 million supply limit, which makes it non-inflationary and a good store of value, in theory. Gold, of course, is the store of value par excellence, with a limited supply and a solid track record that goes back millennia. But, if Uganda is sitting on 31 million metric tons of gold ore, as the government declared, might not that substantially boost the world's gold supply? That in turn could lower the price of gold, and make it a less secure store of value, generally. Gold's loss could be the cryptocurrency's gain. Some drew encouragement from this notion. MicroStrategy's CEO Michael Saylor, for instance, posted a video on Twitter about the Ugandan discovery of huge gold deposits, which might net 320,158 metric tons of refined gold, valued at $12.8 trillion. As Saylor noted on June 17, #gold is plentiful. #Bitcoin is scarce, further telling CNBC. Every commodity in the world has looked good in a hyperinflationary environment, but the dirty secret is you can make more oil, you can make more silver, you can make more gold. Bitcoin's the only thing that looks like a commodity that is scarce and capped. But, perhaps there is less here than meets the eye. The 320,158 metric tons of refined gold that the Ugandan Mining Ministry spokesman said could be produced from the new deposits in the country's northeastern corner would far exceed the 200,000 metric tons in above-ground gold that exist in the entire world today. One gold mining trade publication went so far as to suggest the Ugandan government may have been confusing metric tons with ounces in its projections. The World Gold Council was asked for comment about the Uganda discovery and the plausibility of its numbers. The council doesn't typically comment on media reports of gold discoveries, a spokesperson said, but added, in the absence of formal or reserve resource declarations, we would not expect these discoveries to contribute materially to mine supply in the foreseeable future. But, to the larger issue, Saylor may have a point. The fact is that more gold can always be mined, whether in Uganda or somewhere else, especially with advances in surveying and mining technologies, including aerial exploration. And, if so, doesn't this make Bitcoin, with its strict 21 million BTC limit, look non-inflationary by comparison, and a potentially better store of value? Garrick Heilman, head of research at blockchain.com, said, the Ugandan find underscores why the approximately 200 million holders of Bitcoin believe that digital gold, Bitcoin, is superior to actual gold in terms of its scarcity and reliability as a store of value in the decades to come. As was the case with other major gold discoveries in history, like the 19th century South African gold rush, the introduction of this much new gold, or even just growing awareness of the Ugandan find, could have significant negative price implications for gold over the coming years, Heilman said. Not all agree with this assessment, however. People label Bitcoin as digital gold, because it was considered a hedging asset, especially against the stock market. This has not been true at least for the last 3 years, Ishwar Venugopal, assistant professor in the Department of Finance at the University of Central Florida. The increasing participation of institutional investors means BTC is now more correlated with risky assets like equities, whereas a store of value instrument should be uncorrelated with the stock market. Added Venugopal. When institutional investors enter such markets, their usual trading stop-loss limits apply in assets in their portfolio and by extension the market become positively correlated with each other. The fact that Bitcoin is bought and sold just like any other risky asset undermines that digital gold tag given to it. In point of fact, it is clear that the majority of investors do not see Bitcoin as digital gold yet. Ferdinando Amitrano, founder and CEO of CheckSig, and a founder of the Digital Gold Institute. Meanwhile, Bitcoin is not governed by any entity or a third party and hence is subject to price swings purely based on how the market prices it, Vijay Iyer, Vice President of Corporate Development and International at Luno, told Cointelegraph. This means that it probably has to go through a significant maturation before it ever becomes digital gold. As Iyer further explained, any new monetary asset undergoes a process of monetization through which it becomes more widely regarded as a store of value as a first step. This process could take another 5 to 10 years even. Gold has been around for thousands of years. Hence, while Bitcoin has all the properties of potentially replacing gold, this may still take some time. The Bitcoin network has been in operation for a little more than 10 years and market penetration is still less than 1% globally, Ayer added, though others believe global adoption rates are higher. In any event, Bitcoin penetration needs to get higher levels as a first step. Are the numbers plausible? As mentioned, the numbers put out by the Ugandan Mining Ministry drew some skepticism. Generally speaking, gold has survived as a store of value over the millennia because it is durable, scarce and difficult to mine. A great deal of gold ore is required to produce a single gram of refined gold. Typically, a high-quality underground gold mine will yield 8 to 10 grams of refined gold per metric ton of gold ore, according to the World Gold Council, while a marginal quality mine generates 4 to 6 grams per metric ton. If one settles on a rough average of 7 grams of refined gold per metric ton of gold ore, this means Uganda's mines will generate about 217 metric ton of refined gold, a far cry from the 320,158 metric tons of refined gold that Solomon Muyita, spokesperson from Uganda's Ministry of Energy and Mineral Development, told Reuters could be produced by the country's new discovery. The addition of 217 metric tons would raise the world's stock of above-ground refined gold by only about 0.1%. All this has only an indirect bearing on the Bitcoin, digital gold, question, which Venugopal, among others, acknowledges is a difficult one. As with fiat currencies, Bitcoin's value comes from adoption and users' faith in the system, he said. Before Bitcoin can be a store of value, it requires a user base comparable to that of a large fiat currency, in his view. Adding, I see Bitcoin becoming a risk asset but not as a ubiquitous store of value because it is volatile, highly inefficient to mint and challenges sovereignty. In fact, Venugopal views Bitcoin more as an experiment to show what is possible and spur innovation. It has accomplished this, but he expects a more efficient cryptocurrency to eventually emerge and supplant it, or perhaps a central bank digital currency. Ayer agrees that BTC's recent price volatility hasn't brought it any closer to achieving digital gold status. Bitcoin has never existed under circumstances we're currently witnessing and hence this is definitely a test for the asset class as a whole. Elsewhere, Heilman is more optimistic. Technologically, Bitcoin simply offers more than a commodity like gold can ever deliver in the long run as an SOV. Algorithmically deterministic supply schedules such as Bitcoin's hold a big predictability edge over gold. And predictability is critical for taming exchange rate volatility, which must be subdued for something to evolve from serving as a store of value to actual money. Heilman said. And, while relatively few people view Bitcoin as a store of value today, things need not remain that way. At the burst of the dot-com bubble, Amazon lost 90% of its value because most investors did not understand how pervasive e-commerce would become, commented Amitrano. Blockchain technology may be similarly underappreciated today, He added, referencing economist Paul Krugman's 1998 prediction that the internet would prove less relevant than the fax machine. Sometimes intelligent people simply don't know. MicroStrategy scoops up 480 Bitcoin amid market slump. The business intelligence firm has now amassed 129,699 BTC at an average price of $30,644, according to CEO Michael Saylor. Business intelligence firm MicroStrategy has added to its Bitcoin, BTC, holdings, reaffirming CEO Michael Saylor's bullish outlook on the digital asset despite its recent struggles. In a Form 8K filing with the United States Securities and Exchange Commission, SEC, MicroStrategy disclosed that it had acquired an additional 480 BTC at an average price of roughly $20,817. The total purchase amount was $10 million in cash. With the purchase, MicroStrategy now holds 129,699 BTC, making it the largest corporate holder of Bitcoin. The total value of its holdings is roughly $3.98 billion. The business intelligence firm is scooping up Bitcoin during a period of extreme market volatility. On Wednesday, Bitcoin's price briefly dipped below $20,000, which is more than $10,000 lower than the company's average acquisition price. The company's BTC stash is currently sitting at a net unrealized loss of nearly $1.4 billion, according to data provided by Bitcoin Treasuries. Michael Saylor, the firm's CEO, remains bullish on Bitcoin's long-term prospects. Earlier this month, he told his 2.5 million Twitter followers that the firm plans to HODL through adversity and has no plans to offload its holdings. The bullish reaffirmation came amid rumors that the company risked a margin call if Bitcoin's price fell below $21,000. According to Saylor, the margin call rumor is a nothing issue. MicroStrategy reported first quarter revenues of $119.3 million. Gross profit for the quarter was $93.6 million.